We will get started shortly, everybody. We will get started in a few minutes. We'll get started shortly. I'd like to log on a couple minutes early here, everybody, just so that people see us live on YouTube. And then we get folks join us here shortly here on Zoom. Everybody's having a warm night, staying cold, staying warm and safe out there. Nice. I think it's 29 degrees down here in Austin. It'll be 21 overnight. No new precipitation. I know some folks are obviously getting 6, 12, 18 inches of snow and everything from different parts of the country. Austin has like one salt spreader or something like that. And some lady was complaining on Twitter today, why does Austin, Texas not, or Dallas, Texas not have more vehicles? And the mass amount of highways in the DFW area just make it unrealistic for the most part for them to be able to spread salt and sand and all that good stuff. But it's just funny how people like to complain a lot of things. But anyway, we're gonna have some fun tonight, everybody. I've not hit the record button yet. We'll get rock and roll here in another minute or two. Let other folks get joined in here. Um, we are monitoring the YouTube live stream too. So if you're on YouTube, you might want to go ahead over to notenightAmerica.com and register and jump into the Zoom live stream. We'll be monitoring questions 100% from the Zoom call for you guys that are here on here already. If you're already here on the Zoom or even on YouTube, if you're in a specific Texas market, and I mean besides living in, if you're not living in Texas, by all means that's fine. But if you're looking to invest in different Texas cities, Houston, Dallas, Austin, Corpus, San Antonio, the Valley, El Paso, the Panhandle, if you're already investing in one of those markets, please let me know. We'll try to as we have more time, as we get to the later part of tonight's webinar, we'll try to dive into a few examples of stuff uh, and look at individual deals for you to take a look at. But there's a lot, 219 to be precise, 218, 219 non-performers. There's originally 450 about 2 weeks ago. We've got 50 to 100. I've got 50 bids, 100 and some odd total Texas bids out already on a bunch of stuff. Doesn't mean these are bad, the leftovers. I mean, they're technically are the leftovers, but still plenty of opportunity. I just don't think a lot of people bid on stuff. And so there's opportunities here. We already broke down one or two this morning on my Monday morning coaching call with my coaching students. So um, anyway, got some great stuff to go through tonight for you as we dive deeper in here as we get started here in just another minute or so. All right, I see 3 minutes past the hour. Let's get rock and rolling. All righty then. Hey, everybody, welcome to this episode of Note Night in America. We're glad to have you guys here. As we mentioned earlier, about a week or two ago, we're going to be doing regular Monday night webinars breaking down assets and deals. And here's another example of a tape that we're actually actively working. This is not just an example, it's actually a live working list of notes that we're working through, evaluating, making some offers on. If you guys are joining us for the first time, I'm Scott Carson, known across the country as a note guy. My main company is WeCloseNotes.com. We're a Austin-based real estate investment firm focusing on the niche of investing in distressed notes, primarily non-performing notes, first liens, uh, institutional debt direct from banks and hedge funds. And then this is a tape that was once is a part of a larger overall tape. About 4 weeks ago, we got a tape of 4,200 plus assets. We did a breakdown on those for the first Note Night in America of the year. Made a bunch of offers, and the last week we got the tape back from the hedge fund. 1,200 bids and notes were removed, but there's remaining 3,067. This Saturday, we did kind of a 2 hour webinar breakdown on those 3,067. And Sunday night, about 4 o'clock, after watching the AFC Championship game, I said, you know what, it'd be a good idea to just do a Texas breakdown because I know we've got such a huge percentage of our followers, network, email databases from the lovely Lone Star State. I'm in Austin, Texas. And thought we would spend some time going through these different deals because you don't have to be from Texas to love investing in Texas. Texas is the fastest foreclosure state in the country. Even though our major markets have hit a little bit of a downturn in valuation, I saw a report out that ranked the top 50 metroplexes in the United States and talked about how the values have stayed the same, gone up, or gone down. Well, Austin, where I live, actually had the biggest hit across the top 50 markets with a negative 6% reduction in values overall. San Antonio had a little bit of downfall. Dallas, Houston all had a couple percentage points down. Doesn't mean it's in a crash. We believe if you're here in Texas, we've had such amazing years of appreciation and growth. We just see that as a correction. So anyway, we're going to dive into these non-performing notes. There's different values. Like I said, the map basically gives you a bit of an idea here, breakdown on the geography of these 219. Like I said, it's all across Texas. Houston, Dallas, San Antonio, even Central Texas, South Texas, Corpus, Panhandle up in like Amarillo, West Texas out in El Paso, or even out in like Abilene or Midland if you're watching the Landman series and stuff like that. So there are no dumb questions. So if you're joining us here live on Zoom, there are no dumb questions. I just ask you to keep your questions relevant on hand. All right. Chat roll is open for you to type in and ask questions of me. If you're watching this on the YouTube, I do encourage you to go over to notenightinamerica.com and join us live in the Zoom. That way it's easier for me to ask questions or answer your questions and keep you abreast of the situation. But like I said, let's do a deeper dive in this. But before we do get rock and rolling, we are just over a month out from our next upcoming workshop. Now we're hosting an in-person workshop here in Austin, Texas, February 27th, 28th, and March 1st. That's a Friday, Saturday, Sunday. And it's a 3-day workshop. We encourage you to come on in. Normally, our in-person workshops are $9.97 a person. We are still running a 50% off sale. We've got about 25 to 27 seats available, 40 to 10. It's going to be, we keep it at 50 people. We like to keep it small. But I tell you right now, everybody that shows up is going to have a couple deals, a couple case studies to work through. And I wouldn't be surprised you see some of these off of the list. I also heavily expect us to be in the throes of doing due diligence on probably 50 assets when you arrive here. And, if you're investing in other states, other areas of the United States, don't worry about it. If you'll reach out to let me know, I'm glad to do a carve out on some of these remaining 3,000 assets that this list of 219 are still carved out from. And it's a variety of notes anywhere from, 120 days past due to a couple of years. But come on out to Austin, Texas. We'll spend the full day on how to find these types of deals, how to fund these on day 2. The marketing side, we'll break down the due diligence side and put it all together on day 3 for you and rock and roll. And if we've got some time, we might even take a little bit of an excursion and go look at a couple assets. Who knows? Just depends on what we get rock and rolling here. But anyway, join us. You can get signed up for that at notebuyingfordummies.com. Take advantage of the 50% discount while those discount seats are still available. But anyway, let's dive into the spreadsheet and go from there. Let me pull this up. Now I did map this list, and I think I sent it out to you guys in the email blast that we sent out yesterday. And let me pull it up. Do I have it up here? I think I do. I think I can. I do. So this is the interactive map. I mean, like I said, it's some pretty good assets on this. There's some assets up closer in the northern part of the state. It's on multiple acres. I think we have anywhere from just a normal city block, city lot, all the way up to like a 17-acre property. In the bigger list, there's actually a 33-acre property in North Carolina that we're looking at making an offer on. And so there's a lot of great deals on this, some pretty looking properties. There's some single family homes. There's some double wides on some land as well too for you guys. For the most part, these are pretty good condition properties. Not a lot of ugliness. And from what I can tell, the lender has already gone and paid the property taxes on just about every one of them that had back taxes owed on it. Okay. And a lot of great stuff on it. We already, like I said, we looked at a couple. We looked at one in Tyler earlier today for one of our coaching students. We looked at another one in Dripping Springs, which is actually kind of southwest from where I've located here in Austin, Texas. A nice looking house. And so a lot of opportunities for us to dive into. So let's pull up the spreadsheet and we'll go from there. But to give you an idea, this is batch June. You can kind of see how it mapped out there. I mean, I always get excited when I see stuff around Central Texas, like Austin, where I live. If that's not a true sign of distress increasing in the markets, I don't know what is. I mean, Houston's always going to have its fair share of foreclosures and stuff like that. San Antonio as well, same with DFW. But Austin, for the most part, living in Austin is one of the reasons I had to buy outside of my area to start off as a note investor. Is I just didn't see a lot of stuff here locally that made sense. And that's why we've bought thousands of deals across the United States. I'm a big fan of Indiana, Ohio, Michigan, bought a lot in Florida. I think there's a lot of opportunity in Florida for the right person if you know what you're doing out that neck of the woods. It's every market's got its opportunities. If you can buy it right, that's the big thing, as we always say, right? So let's pull up the spreadsheet. I don't have a live interactive link for this spreadsheet yet. I found something interesting as I was carving out this list of 219 from the 3,000. If you were on Saturday's live stream with me, we had a lot of formulas on there about equity, about ROI, if they reinstate, if they don't reinstate, what REO percentage, REO profits, sub two things. And I don't know what happened. Maybe I've just been marketing too much lately, but when I pulled that spreadsheet over, it didn't pull all the formulas. I actually had to spend time this afternoon going back in and recalculating all the formulas, readjusting things, making sure everything was working right so we could play around with it. And so I'll get that live spreadsheet back out to you guys that are live on here with me tonight. Okay. So you'll get that to you after the webinar. I'm not going to send it right now because we'll end up adjusting some things and it'll save me having to send 2 or 3 emails out and go from there. So for some of you guys that were in the coaching call today and our WCN crew and one-on-one coaching students, I sent you the list, but I didn't send you the stuff with the formulas on it just because we were working through some stuff. But anyways, let's dive into tonight's spreadsheet and we'll go from there first. Okay. So 219 total liens, and we have edited the spreadsheet a little bit here. I'm going to go ahead and, for the sake of, to avoid getting my webinar shut down for bullying, we're going to just focus on the city and state right now. Now, when we start diving and looking at some more in specific stuff on an asset by asset level, then we'll open up the address and look at those individually for us. I find that YouTube does not like it when I post actual addresses, and that's okay. There's no borrower's name on this. That's one thing that was missing from the spreadsheet was the borrower's information. And for you guys that are watching this, is the size all right? Do I need to blow it up a little bit, make it a little bit bigger for you? So it's a little bit easier for you guys to see on your side. If you're watching this on your phone, it's not going to show up. I'm not going to where you can see on your phone, but I'm going to make it a little bit bigger, make it a little bit easier. So anyway, loan numbers on here that came from the seller. The exit strategy, we took a look at these earlier, and it's a couple different strategies. Now, the great thing is it does have a column that shows kind of the legal process, and we are also able to determine the number of months behind. So the ones that are really 6 months or less behind, those can be potential sub 2 deals. That's not also saying they're not great non-performing stuff. They are here in Texas because we have the fast foreclosure process. But some of these are not just 6 months behind. Some of these are about a year behind or more. And they're also in some sort of loss mitigation, bankruptcy status. And we've got these kind of filled in here. Sub 2s, which could also be non-performers, BKs, And then we also got some foreclosures, REOs, that we can do a deeper dive into, see what kind of the condition they're looking at. We have been very lucky. A lot of these, there are photos, current photos of the properties online. Some of these are very newly originated in the last year. And so we've got a pretty good take on the value on these. All right. They did pull AVMs, not full BPOs, but full AVMs on these things. And then the ones that were missing, I spent time today going and pulling up those values on those missing 20 that didn't have an AVM valuation on it. And this is a tape that was pulled as you can see, 12/31, and then also in January we found some dates on. So it's a very recent list, not a joker broker, not a daisy chain of any sort. We're direct to the seller on this stuff. If you do decide to bid on any of these stuff, we're glad to submit them as a bid. Bids are due by Wednesday, end of the business Wednesday. And there is a 1% fee to me if you're not a coaching student, a current coaching student. There is a 1% fee off the funded balance whenever you go to fund. Now, if you get a bid accepted, they're going to give you probably 2 to 3 weeks for due diligence, depending on how many you're bidding on, and then probably a week to close. All right, a week to fund. So we can go through more of that later on. Clock doesn't start till they send you the collateral files, and I guarantee you, if they've got 4,000 plus assets and they're getting offers on 1,200 or more, it's going to take them a while to pull those collateral files together. So anyway, with the original balance, we have the current UP balance. We have the most of these are going to be fixed rate or ARMs. We're going to hide some of these columns and make it a little bit easier for us tonight. Okay. Now, the estimated legal balance is something I inserted by taking the current balance, taking the number of payments behind they are, and then also looking at the escrow advanced or lender advanced escrow stuff for taxes, insurance, stuff like that, and rolled that in here as well to get an estimated legal balance. It's not 100%, probably missing a month or two, some things like that, but it's a better idea than just figuring what the current balance is. Okay. We took an equity percentage by looking at current market value and subtracting, looking at current market value, subtracting the estimated legal balance. And you can see some of these are positive equity, some are negative equity. Okay. Based on the equity percentage, anything below 10% equity, we figured, okay, take your bid should somewhere be around 65% of the fair market value when the balance is higher than the market value is. Where there is equity, we figured 80% of the legal balance as a rough offering. Okay, we got that calculation in here for you. And look, guys and gals, that is just a guide. It is not hard and set. It's not set by. I was told when we got the tape in to make our highest and best as possible. The fact that my bids that we submitted previously have not been, we're not kicked to the curb, tells me we're right on that spec, especially when you got 4,200 assets and the whole portfolio of this lender is trying to move. So that tells me they are motivated to move some of the stuff. Okay. Question here from somebody. Let's see here. How much equity should you have to pay 80% of legal balance? Oh, that's a great question. So I say you want to have somewhere around 10% or more at about a $50,000 equity percentage. Does that make sense? So if you got $50,000 in equity on a $500,000 property, that's about 10%. So somewhere around that 10% to $50,000, where you're at that 80%. Now, if you're at 10% of equity and it's at 95 and it's worth 100, that's not really high equity. I would go more off the 65% of fair market value. Okay. It's a floating number a little bit because we all know AVMs are not accurate. They're a guide. So if you find that the market value is 200, not 250, and the balance is 199, legal balance is 199, well, that's no equity versus having 25% equity. So you got to adjust that down. So these are just kind of based off of what they gave me and calculating that and what I can determine here. But it's better to know if there is equity, especially with a high, especially when some of these are 12 plus months or further along, you got to figure in the legal balance versus just off the unpaid balance. Okay. What we also calculated in here was this REO net. And that number is, depending on what your bid is, it's going to be your offering, when there is equity, taking the legal balance minus your offering to figure out what it is. So like this first one is a ton of equity, but that you only owed 192. You make an offer at 154. That's at 80%. 192 minus the 154 is 35,000. And then the equity percentage is somewhere around that, to pin the two. Now, we also figured in for performance, if you were to get the borrowers back on track, we always like to put in two columns here. One is if they just start paying on time again, don't reinstate, but just start paying on time again. We like to figure in 12 months of P&I payments, okay? And taking that 12-month of P&I payments, dividing that by your offering amount gives you a rough ROI, okay? And I always call that 12-month ROI percentage if you just got them to go, okay? Of course, we prefer 16 months, especially most of these are going to be at a minimum of 4 to 5 months or more. So if you get them paying at least 16 months, bringing 4 months to the table on the front end, or you have a little skin in the game and they pay a little bit extra, okay? If you're collecting at least 16 months on the front end in the first year, that's where that 17 grand on this one comes in. They paid 16 months. The 11% ROI is if they paid 16 months of payments in a 12-month basis. And then after that, it's just a normal 12 months. So it's 11% kind of the front end side of this thing. Year one, after 12 months, it drops down to 8% for this first one as a bit of an example. Okay, now, if you like this asset and you want to get a higher return, yeah, you would go adjust and lower your offering amount, okay, and drop that down to, whatever it is. Okay, but it gives you a bit of an idea. Loan type, you can tell by FHA, VA, you're going to need a licensed servicer. You cannot self-service these. All right, you're going to have a licensed servicer. All right, we have the original term, remaining term, original rate. We're going to hide those at that column because we do have the rate of the mortgage. And like I said, the interest rate on these runs from anywhere from 5% up to just under 9%, 8.25. Okay. Here's the given P&I payment that was already inserted in there. I highlighted that in green so we know where it's at. It's kind of a marker. Total PITI payment, the FICO score when it was originated, original LTV, original combined loan to value. Most of these are just first liens. Most of them are not going to have second liens on these. Current loan to value, back end debt to income ratio when it was originated. They had the front end column in there, and we took it off there because we didn't need the front end. It's not really, we don't really need the back end debt to income ratio because that time has changed, right? All of these are either owner occupied. Yeah, they're all owner occupied. So what I'm going to do with that is I'm going to hide that column. They're all owner occupied. Okay. Property type, we have single family, we have townhome, we have some prefabricated, and then we also have some others in there. And the others, I think, are mobile homes on land for the most part. Okay. Loan purchase, loan purpose purchase, refinance, no cash out refis, that kind of stuff. Refi type, document is full doc or streamlined. We have the sales price, what the property sold for originally in most of this, which is good. We have the origination date, and you can see these origination dates go back to 2013. All right. So some of these have built quite a bit of equity up into this deal. Okay. First payment date. And this is where my spreadsheet starts to bog down with that little, okay. Wouldn't be surprised if it bogs down a couple more times tonight. But anyway, first pay date, paid through date. And then I highlighted the column here, next pay date. This tells you kind of how far behind. You can see anywhere from like 4 months all the way upwards to 34 months behind. Okay, why they haven't foreclosed yet, I don't know. We're going to look at one from each side, one relatively new, and then a couple of the older ones that are the most furthest behind. We'll also look at balance on some of these things with a lower balance and look at the higher balance stuff. Some of these you're not going to even want to make offers on because the balance is a little bit higher as far as values. Okay. Since our VA, FHA, they're going to have some mortgage insurance on these things. The loan status, this is a really important one. You can see bankruptcy, REO default, foreclosure, loss submit, REO. Means they've already foreclosed on the thing. General population, some are bankruptcy. Some of these have a prior 60-day default. Some of them are re-default risk of falling behind again. All right, so this is one of the most valuable columns in the whole spreadsheet, telling us what the existing lender has them kind of down for. All right, now we don't always get that, which is a beautiful thing. We got the pay string here. If you want to stretch that out, we can stretch that out and then you can see the months behind, which works out fine for me. Sometimes we'll see 12, 24 months of payment history on these. I'm glad those aren't on there because that just makes the spreadsheet that much further. BK status, yes or no. On a BK, it's not necessarily a bad thing if you're in the note business. It's usually the foreclosure gets suspended and delayed while it's going through bankruptcy, and usually can turn into a bankruptcy payment plan for the most part, where it's a Chapter 13. Now, if they've been admitted to a Chapter 7, that's a liquidation of debt. That means you're going to finish the foreclosure or they're going to sell the property and go from there. Okay. Let's keep moving on. No prepayment penalty, known defects. I mean, is there any issues with the collateral file? I think most of this is no. Yeah, no. So we're going to highlight these. We don't need these in there. You can see the escrow advances, usually taxes and insurance and other things, recoverable advances, third-party advance, loss mitigation status or loan modification status. The first legal date is a valuable aspect in there because that means that the lender has already filed the notice of default or filed the demand letter. Now, some of these, they go back a little bit. Other times, what are they waiting for, right? Now, I don't know if this was all originated by the underlying lender or they bought a big chunk of this. I think they've bought a chunk of this and now they move it. Now we have the AVM values. Basically, that's just the, I would say Zillow score, but the fact that they have a confidence score, they probably use a third-party vendor to pull AVMs on them. And you can see the confidence scores go anywhere from like 95 down to 60, depending on where it's at. Okay. Question here for somebody. So question on this stuff. So why, Judy asked a great question. Why is there 30 and then a lot higher amounts of some of these things? It depends on what they've had to advance for. Usually property taxes and insurance, they'll advance something that's fully recoverable. Okay. Now some of these, like the escrow advances, that's just taxes and insurance. Recoverable advances, that may be a variety of lawn maintenance. It might be a variety of other things, repairing the property if it needed. I don't know exactly what it is. That's something that you'll dive in deeper during the due diligence process on that stuff. But that's one thing to always double check. You know, recoverable advances, great. Usually your taxes and insurance are going to be this. The $60, I have no idea what the $60 to $30 thing. Did they file something to the county? I don't know. All right, that's what we have to double check what that expense is for. That'll all be detailed in the notes. Okay. The confidence score, AVM dates, these were pulled. They're all basically mid-December. Then you got other different total corporate advances, interest advances. Usually just means that the interest payments have been advanced. It's recoverable, basically. Okay. So now that we have this, I also, if we go back here, I took the opportunity, like I told you earlier, to go through in these guides to get a bit of an idea where I thought the exit strategy play was for these. Is it a non-performing note? Is it a BK opportunity? Is it a sub-2 to non-performing side of things? In the previous webinar a couple weeks ago, I just had the sub-2 sides. I didn't figure in buying the notes because they were at 90 days at that point. Now that we've advanced another month and we're coming up on February 1st, well, in Texas, we all know what that means. You get more than 90 days behind. Every note in Texas is a foreclosure possibility, right? So we've run numbers for that aspect on what would you buy the note at and going from there, whether there's equity or no equity, and going from there. If it's a sub-2 deal, I'm going to wait till the very end to kind of go through the sub-2s. If you were to market these for sub-2s, I think you should. It's one thing we're doing. We'll be dropping letters throughout the rest of the week too to these 219 for potential sub-2 deals on the ones that make sense. You know, the ones that are at 6 months or less, that's what we'll target. When you're 6 months or further behind, it's not really going to be a sub-2 deal. It's more of a buy the note, foreclose, or buy the note, try to work it out in some sort of fashion with the borrower. All right. Let's do this. Let's just give you a bit of an idea. Let's look at the REO side. Okay. So we're just going to select the REOs. And you can see 1, 2, 3, 4, 5, 6, 7, 8, 9. So there are 9 REOs on this thing. Okay. Let's just look at the Waco one. Okay. I'm going to go ahead and unhide the addresses for these. This one's at La Vega. Oh, I hit it, not unhide. Hit it. All right. Unhide. There we go. All right. 1214 La Vega Street in Waco, Texas. We're just going to do that. We're going to go over here. It's valued, original balance is 182. Current balance is roughly about the same thing. Estimated legal balance is about 212. They have negative equity, about 33% negative equity. So they're upside down. I'd offer about 104 on this. This is an REO. So 65, 70 cents on the dollar, whatever makes sense for you based on what you find as value. So let me go over here. Since you're buying the REO, you don't really worry about modifying it. Okay, let's see here. What is going on? Oh, that's strange. My search engine changed from Google to Yahoo when I reset it. Okay, I have to reset that. Let's try this again. All right, so this one you see, this is from November of this year, 2025. Okay. I always find it's funny when they've got a walkway to nothing. So I think this was a previous property that somebody went and slapped a modular on it, which is not bad. I mean, November 2025. Somebody's trying to lease this property. Let's go back here and take a look at something. Oh, so somebody was trying to rent this at some point. It's off market. Okay, see. So rent for about $12.95 a month if you like Waco. But it looks like it was, like I said, originally a house that somebody put a modular on, which I don't have an issue with that. I would just want to make sure it's 1,344 square feet. There you go. That's a better picture of that. It says sold, but I believe that was the foreclosure auction that took place recently to sell it, and they took it back. Yeah, it's because it's on a lot of these REOs, it's still showing the underlying lender. So there you go. Not a bad looking, in Waco, you can drop a modular home or double wide on the lot and go from there. If it'll rent for $1,300 a month, it'll rent for $1,300 a month. All right, so let's go to another one. Let me go to back to the spreadsheet. Let's pull that one up in Dallas. Let's take a look at that one in Dallas. 10809 Dunaway Drive in Dallas, Texas. Rosa balance was 300. Let's go back here. Okay, why is it still showing it? I don't want Yahoo. And here's this property. And it's the same thing. So somebody took and dropped a modular home on an empty lot. And this was February 2025. So somebody paid to go do this. They didn't follow through on the lender, and the lender foreclosed on them. So on some of these modulars, I think you could probably get away with 70, 65% of the fair market value, depending on what you figure the value is on those things. Okay. So there's definitely some opportunity there for you. All right. So let's look at one more. I'm going to jump over to one in, let's go to Texas City. That's over by Houston. It's 14 photos of this one. Oh, look at that. That's a nice little house. 4-2, 1,554. That doesn't look like a modular home, does it? No, it looks like it's just been a home that's been remodeled. Oh, yeah, obviously they foreclosed on it, had some stuff in it, and it is as it is. Okay, so I don't mind that at all. Looks like it's pretty decent little home there in Texas City. And if we go back to, what did Zillow say? Street view of this one is. This is from May of last year, May of 2025. So they had some kids out there previously. And what does this say here? They're trying to sell it in a scenario. So there you go. Some opportunity for you guys. It obviously looks like they're probably trying to sell it beforehand and then go through. So it's on a pretty good sized lot. Not bad. On the REO side, if you can buy them at the right price, get a hard money lender or a DSCR lender to come in and finance those for, especially if you can get them at below 80% of value. That makes a lot of sense. I made some offers originally on these REOs, not these that we're looking at, but some other ones here locally, Central Texas, San Antonio. down in Corpus Christi at the price that DSCR lender would fund it. So that's what you want to do. That's an opportunity for you to do. All right. Now let's go back to the spreadsheet here. And let's change it. Let's look at these non-performers. Let's look at the non-performing bankruptcy first. Okay. Now on these, all right, so there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There's 11 here. Now there's one in Tyler. This is not one we looked at earlier. This is a different one. There's also, now we did look at this one in Montgomery, Texas. We brought filed bankruptcy. Now, if you look back, if we go over here and you can kind of give an idea, if it's going to be like a chapter 7, it's liquidation. They're upside down. Okay. They have negative 25 grand in equity. I say offer 160 for the note. It's at 85 or 65% of the balance. They are, let's see how many months behind they are. Okay, come on. 11 grand, 12 grand behind. I don't know what my spreadsheet is doing here. It's starting to drop down a little bit. Okay. So August of last year. So they were 7 months behind. August, September, October, November, December, January, and February. So they're coming on 7 months here in a week. Okay. So they filed bankruptcy. Let's go over and look at the legal status of what they were giving us. So bankruptcy. So they must have just filed bankruptcy on this thing. Yeah, you can see 1, 2, 2. You see that in the payment history. 1, 2, 2, 3, 4, 4, 5. They tried to then file bankruptcy to avoid a foreclosure. It's probably got a foreclosure filing notice from the bank and the borrower filed bankruptcy. That's not a bad thing, because if you look at this, if I'm going to have them start making payments, and that's what's usually going to go through a bankruptcy filing. If you go to pacer.gov and take a look at it, origination was made in March of last year, and they fell behind after July. They made 4 payments and then stopped. Okay. And they just did a streamlined refi, rate and term. Okay. But they're 12 grand behind. So the idea is taking that 11,805, and if you figure like what a chapter 13 payment plan might look like, provide that they're not behind by anything else. So let's take a look at that. So let's just take 12 grand and divide that by 60 months. That means they're paying an extra $200 a month. Now their monthly P&I payment is $1,686. Okay. So 200 times 12 is 2,400 bucks. So basically a BK is trying to get them just to pay roughly a payment and a half extra. I'd want them to try to bring a little bit, at least 2 extra months, and then start paying $200 a month to the table if we could. But let's look at, if they just started making that monthly P&I payment again, what does the yield look like? Well, the yield looks like it's a 13% cash and cash return based on our offering of that. All right. So 13%, if you're going to make a little bit more, you're going to see somewhere between a 13 and 17%. If they make 4 months of payments and are able to get caught back up, 5 months of payments in the first year and they're back to normal by the end of year 1, guess what? That's great. 17% first year, 13% second year. That's not a bad yield. If you're looking for a 12% return on your money, that's probably a pretty good one to start off with, right? If you're not and you've got to raise capital, it's probably a little skinny for it. Unless you can get 8% money where you're going to make a decent chunk in that first year, paying your investor 8% on their amount, you're still going to net a little bit after year 1. But I would like a little higher ROI in that one. But a BK, we don't know what the payment plan is or what's been submitted yet. Who knows? There's been many times I've bought bankruptcy notes. There was already a chunk sitting at the court trustee waiting for the lender to come to the table. So that's a possibility. The one that does look the better one up here is this 20%. And that's based on if they start paying. Let's see where this one is located. This one has negative 40%. Oh, estimated legal balance is 490. It is in Weatherford, Texas. Okay, let's take a look at this one. 457 Shady Oak Drive. If you don't know where Weatherford is west of Dallas Fort Worth. It's kind of a very I think it's one of the faster growing areas of the Texas. But out to Weatherford, it's kind of the path of progress outside of Fort Worth. So we go in. This is probably on an acre or two. It's the view above. So this is a 3-2, 1624. That's nice. Once again, sold because it's on 2 acres. Let's see if we have any information on this. And see, this one was updated in June of 2023. All right, so this is an old listing from that time. All right, if we just click on, I mean, that's a good looking property on 2 acres. Let's go back to the spreadsheet and take a look at some of the numbers on here. Okay, so on this one here, we're just going to click highlight on this one. So current balance is really legal balance is 490. They're upside down on this thing. So they took out a 40-year mortgage on this at 6.88. P&I payment of 286 a month. Yeah, you guys can see my screen. That's good. They're 25 grand in the hole. See, they took this out February 2020. That's why it says sold in November of 2023. Made payments on it for a while, paid through May of last year, and defaulted after May. So they're now in the default race, and they filed bankruptcy. Same thing. If you can get this bar to come to the table, make their existing payment, and start making a couple extra payments per year, it could be a pretty good yield to you. If they just start making the 12 months of payments, let's look at this one real fast. I'm going back, total payments. So 2846. So yeah, if they come, and that's the great thing on bankruptcy, if they come back and say, oh, we need to make a payment, it's only 2 grand, well, that doesn't make any sense. Whoops. Come on, computer. This spreadsheet's taking up a lot of memory here. Okay. There we go. So if they just start making payments, that's a 15% yield. They pay anything extra, it's above that. So that one's a kind of a desirable one, I think, if you've got a chunk of change. With a 40-year mortgage, I'm not going to adjust that to a 50-year. All right. On this one, either A, let's get you making payments, or let's deed the property and get the heck out of Dodge here for you. Because if they do, if we look at this, based on our offering at 231, they're way upside down. The value's not there. Value's dropped. So you could net about 125 on a foreclosure auction there. And it hopefully it's in good condition. I imagine it's probably in pretty good condition. So that's the BK stuff and things like that. That was if you like BKs can be great cash flow. Sometimes we do see them that they want more for them than what we're willing to pay in some cases because of the fact that it's going to be a payment stream for 5 years. So if there's been relief granted on some of these, that means that there's kind of a payment plan already in place. You can step into some of those. Another time your servicer in your servicer's attorney that is handling the BK auction, or not the BK auction, but the BK creditor hearings and looking, evaluating things and go from there. All right. So let's go back over here and let's look at the NPN foreclosures and just the true NPNs. All right. So now we're into bunch in here. All right. So you're buying these with the idea that you're going to buy them and then work to get them worked out. Okay. So let's do this. Let's look at for somebody that's brand new to this and they've got a limited amount of funds, let's look at the lower offering prices and then we can work the numbers backwards from there a little bit so you can guys kind of see some things, okay? All right, so the offering side, let's filter this down a little bit. So we're going to skip that one because we already looked at this one this morning. So we're going to say anything. There's a few of these. There's like 3 that are under 100 grand. Okay. And these that are under 100 grand as far as offering, one's in Levelland, Texas, and one's in Orange, Texas. The other one's says Ore City, but it's actually Gilmer, Texas. Yes, Gilmer, where Friday Night Lights, the series, was based on, even though Friday Night Lights was actually filmed in Austin over at Pflugerville High School here in Central Texas. But it says Ore City, but it's actually Gilmer, Texas. All right. And just to give you a bit of an idea where let's look at which would be a good yield on these first. And then we can look at the legal balance. Some have negative equity, not much equity. Some's got a lot of equity. Okay. If we look at getting the bars back on track. So the first one is probably the most desirable is this first one at 16% if they're bringing a couple months to the table over the first 12 months. They've also got a little bit negative equity. All right, let's go here and see what this property looks like so you have a bit of an idea. Why? What I get for resetting. All right, so here we go. Let's let you see where the level land is. Okay. In this one, sorry, this was not out by Waco. This is out in West Texas. And it looks like it's one of those. So, yeah, it's not a bad looking little. This is from July of 2023. New roof, decent looking property. It's kind of the non-brownish color on the block, right? Okay. So this is Levelland, Texas. Let's go back to the spreadsheet. What does the spreadsheet tell us? All right, this borrower original balance is 144. Legal balance about 151. They're basically break even. So 65. You offered 92. Let's go back and see what's going on with this property. So they paid on it for 7 months and then stopped paying. They brought a little bit down. That's sad. So it's a VA loan. You want to make sure they're not active service at full doc, 144,000 sales price. They bought this in December for Christmas 2024, and then they stopped paying 7 months later. 6 months later. So they're 8 months behind. And let's see what they say as far as redefault risk. So this one, yeah, redefault. They figured they fell behind and then fell behind again, or defaulted before. Yeah, so there you go. So that one, I mean, if you don't want anything out in West Texas, then I wouldn't buy in West Texas. But that one doesn't look too bad, depending on what the market says the days of market. Let's go to Orange, Texas. This is down in South Texas. Oh, and here's the thing, ladies and gentlemen. If you want to make an offer, well, like that, and the numbers don't make sense to you there, just adjust it. Just go in here and adjust your bid. So it said pricing guide. So if offering on this 92 doesn't make sense to you, you think the value is less than that based on days in market, then let's see here. So it said 92.95. So you want to make an offer at 85,000. It bumps it to 13%. They just start paying 17%. Let's do this. So this is 92.5, 12 and 16. Okay. Let's look at Orange, Texas. I think Orange is Houston, it's South Texas, I believe, not Orange Grove. Hang on, I'm gonna fix it here real fast. Why is this? Your Google account. I want to make this my primary search engine. I'll have to go back and do it later. I'm gonna do it right now. All right. So you have an idea. So I-10, there we go. It's I-10. Yeah. So it's on the way to, yeah, just off of I-10. There we go. So by Port Arthur. That's what it was. Now, if we look at this property here, look at that. That's a pretty good sized lot. I don't like that size lot, huh? Let's go back here and see how big this place is. 1586 square foot. And it's on well, half an acre, built in 1965. 3-2, 1586. So Zillow gives a value of 142.6. Our spreadsheet gives it a value of, they've got some equity. And it might be a little bit higher. They say it's a little bit less, I think. Let's look here. I'm just gonna pull this thing. Come on, why is it so slow? I don't know. My computer is just, what is it doing? Escape. Ah, I'm gonna stop sharing my video, so maybe it does a little bit better here. Yeah, so this one, if you foreclose on it, don't know if the borrower is alive or deceased, but they stop making payments. If they've been in it for a while, that's the one thing that always pops in my head. Well, if they are deceased, then you're not going to get the borrower back on track. It may make more sense than just to foreclose on it. And if you did foreclose on it at the price of the 87.5, that's still a pretty good yield. We don't have current photo of the interior on this one, I don't think. Let's look when it was originated. 6.75, 731. Come on. Oh, they did. They bought this and well, they must have refinanced this because weird. First pay date was June, and they stopped making the payment. Origination April. Wow, look at that. Sales price was 130, and they immediately stopped making payments. Hmm. That's gonna be probably straight foreclosure on that one. They put something down. Well, that's weird. The original balance is that, the current balance is that. Hmm. Anyway, let's move on here. Okay, so let's do. Okay, why is it only giving us these two? Okay, what is going on with my computer here? My spreadsheet is acting all sorts of funky to me. Let's do this. We're going to close this down and reopen it back up. Nope, don't save. All right, give me 1 second here. Sorry, guys. Let me pull it back up here. So what I'm doing is hopefully it resets a little bit better if we closed it down and open it back up. I did delete a lot of stuff off just earlier because it was running a little bit slower. All right, Texas Notes 3K. Oh, and are all my formulas are gone. Nope, sorry, that's the wrong one. Hang on here. Mm. Ah, damn it all. Where is that? I don't understand. Oh my gosh, dang thing. All my formulas are gone. Lovely. Lovely, lovely, lovely. Um, why did it didn't it can't be it. That can't be it. Hang on here, guys. Let me look at one more thing. No, I saved it. I saved it before we logged off, but none of the let's look at one other thing here. Texas. No, no, no. Nope. Something's up with my Excel. So, all right, guys. Well, that's gonna wrap it up for tonight then. Not what I wanted to see, but technology. I'll see if I can't get it recovered and bring it back up here. But I will. Uh, boy, that's a good kick in the teeth of over 2 hours, 3 hours a week today. Um, Excel's acting this for some weird reasons. Anyway, I'll try to get back out to you. If I can get this list out to you by tomorrow, I will. For those that have attended here, thank you for coming on. And there's some opportunities. I promise you, there's opportunities on that stuff. So we'll try to get out there, get some offers made, and we'll go from there. But otherwise, have a great evening. Once again, our class is upcoming here in a month. Get signed up for it if you can. Note buying for dummies.